Welcome to the Language of Markets live session, the 12th of June. I got it right again. It's Wednesday, Wacky Wednesday. Morning, Raj, Edward. Thanks. How's everybody doing? Welcome everybody who's watching the recordings. Don't forget you guys. Hunky-dory, huh? Yeah, that's right. We are few, but we are crazy, right? All right, let's see what we're going to do today. Markets are nice and fun. It's Wacky Wednesday. That's right. We are few, but we are crazy. And it looks like Nate added a channel on the Slack. And just remember, if you don't see it, I think you have to hit channel add, and it's in there. I think that's how it works. Or add a channel.
And you scroll down until you find homework and click.
Yeah, here it is. Right? Add a channel. And Nate added homework. And I'm going to make a chart for this today also. And we're going to rename this something. But it's basically for practice. It's basically for practice. So that's how you get it, because I didn't see it either at first. Now, everything's tricky around here. All we want to do is trade. I have to keep learning new technology. These things aren't any smarter than my smartphone. Need to click, and then you need to click to join the channel. Thank you, Edward. All right, so I want to look at, markets have been kind of nice and rolling, and there's so much to look at and do. We're going to keep our practice. I'm going to make a type 1 chart. I asked you guys to make a pressure cooker type 1. I did one. We looked at one going up, I think. I think I'm going to make one going down. We're going to find a very pretty example, and then we're going to go into type 2s. But before we get there, we're going to go around markets a little bit. Do a few things. Before even that, I want to highlight something from somebody, and I appreciate you guys when you're sharing your charts and stuff. I want to highlight something from somebody here because we can learn something. All right. So this comes from one of you guys. All right. This is an Amazon trade, a daily Amazon chart. Okay. We were talking about patience and waiting and all that, and so what he did was he waited patiently, and he drew a few structures, and very simple, right? We went over this press structure a while back, and so, he lined it up, expand, price coming down, he lined it up, boom, right? And so this is just absolutely beautiful and what I want to see, all right? You see something, you use some simple thing to see something, you risk it, you do it your way, right? This is what I said, and then you do it your way, right? And now you learn. And, you soak all of that in. And this is beautiful. This is translating. We can see things just quite simply for ourselves and then author it. And this is a beautiful, it had nothing to do with me, right? We just learned a few things. This is a beautiful, just seeing something, looks familiar, right? Seeing something quite simply, and then, you take the risk. You own it, and then you learn. And then not only that, we learn that, geez, we can do this again. I mean, it's not that, it's actually pretty simple, once we start to get the hang of it. It starts to be doable. And, all the trades don't work out well. I mean, this is what we do. We practice. This is what I love about this, right? These sessions are real, right? We're going to have our successes. Yay, I feel good. We're going to have, our ugly months. Ew. But they go hand in hand. We're going to fumble. We're going to roll around. We're going to get frustrated. We're going to have some successes. And, we learn this way. And so, this is an absolute beautiful example. Boom, got the median line. It's rolling down into something here. Now, the only thing I add to this is when you do this is that on top of it, we learn. All right, trade's over. Now you learn because you've got to do the next trade. And so first you're going to learn personally because you watched what you went through to do this. I mean, obviously, this is pretty scary to get long in here. I mean, you're not looking at this when this happens, when you're getting long. You're looking at, ugh. And then you're seeing something. You might not even believe it. Right, Adam? Sometimes you hit some of these things, you don't even believe it. You just do it because you're seeing it. You understand that's the flow. And then all of a sudden, surprise. Wow. And that's how we start to translate theory into practice, concept into practice. Because, okay, it looks good when I do it, right, on the chart and all that. Looks good when you think about it. Then when you get to it, then you got to translate it. It's always a little bit different. So this is just a beautiful example, but then we learn. All right, so first you learn what you went through, the patience. And, one of the biggest surprises for me is after sweating trades like this forever is when I started to do trades like this, I'd put them on and then go away. I didn't even care anymore. And so that's a sign that, you can eventually start to relax. And I know we have to build up, we got to build up a little confidence in ourselves and all of that. But it's really nice when we get surprised. So let's see what we can learn from that. Let's pull up Amazon. So I'm just going to go real quick and see what's learnable from that chart. So here's that daily chart of Amazon. And it was just beautifully simple. You guys see the pressing up through here? Boom, boom. And this is that structure we learned, that press and expand. And then we see price, small swings, chasers, chasers, chasers. And you can see it. Small swings, and then you can see it do a flip as it pulls back into here. Press expand, right? And that's, Grace, that's seeable, isn't it? That's learning the language. And everybody, right? That's seeable, especially when we do those lessons. That's seeable, right? And it's not just, random. And, when you have something like that that's seeable, that you can learn from the model, then we can go to price and, we have a reference point. We can orient ourselves to this thing. This is where they threw them off the cliff. This is absolutely related to the pressure cooker. It's the same kind of thing. There's a principle that underlies the pressure cooker and the press. There's pressure, it's contraction, there's a gap, and it can be used in many ways, although the pressure cooker, we're just using it in a specific way. But let's see what we can learn. Let's just add a little bit more data here. Yeah, Gary, right? They are similar, and I want you to start to hit on that. One of the things that happens, Gary, is like if we just take a flat-out press, they happen in different places. But if they happen to happen in a certain place, it gives you another orientation of the swing. Do you guys see that this is a pressure cooker structure, basically? See, new high, follow it back to where they took off from. And so, Gary, we start to see that, because everything we're doing has underlying principles to it. You know, continued behavior can be used in a lot of ways with pressure cookers or with gaps. When we're looking at a pressure cooker, the underlying principle has to do with that contraction expansion. And so that's where that press expand comes from. And then when we understand that, we can take it into all sorts of things. One of the interesting things we can do with that is like if you're in a range. You know, if you're in a range, and before you break the range, you get a boom, then that's your true level where they threw them off the cliff, even though it's not quite a swing. But it has that principle. And, you know, underlying that, it's a gap. It's a projected mountain. And so after you hit a beautiful trade like that, right? I take nothing away from that trade. It's just beautiful. After you hit a beautiful trade like that, then the next thing you do is you learn a little bit from this. All right, you learn. So now we're just sitting here playing. Pressure's off. You know, you either got your money or you're managing it, whatever. And so now we can structure, again, you know, we can take what was, oh my God, Amazon. Maybe I got to go look at the earnings and see what interest rates are doing and what's going on with the tariffs in Asia. Count how many boxes are going out of their facilities. No, you look, and now you begin to structure because you know how to do a swing. So we can see we came down. See, this is actually all. See this? All of this is the pressure cooker. All of it. It's that buyers meeting, and this is Nate, right? We can do this also. This is buyers meeting sellers in here, and then boom. I actually kind of like to make that a multi-pivot line. Something like that. Yeah, this is buyers. Everybody see that? That's buyers meeting sellers. And they squash them, and they contract. Boom. Projection of a mountain in process. And see, there's the model. And there's applying the model to whatever noise. And when we can do that, now we can begin to think about trade decisions. And so maybe we don't know what's going on in price at one given time, but you know, we have the ability to see swings, to follow swings when they go up, when they go down, and we have the ability to see a few simple structures. And so not only are we learning the simple, okay, new high, follow it back, we're also learning what underlies that. So we now have an understanding. You know, we're not so, okay, I'm just plugging in a pattern kind of a thing. We have an understanding. You have a feel. There's a feel here. We're V'ing. We're doing this. We don't know which way it's going to go. This is contraction. It's balling up. It's like you're pushing down a spring. It can expand this way, or it can expand this way. But we can see them fighting. We don't need to come back here. I mean, you can if you want. But either way, via this swing, there's a pressure. There's a pressure. And then there's a, let's start to make a decision here. And we can see that this is where the decision was made to go blasting up. And then there'll be some news naturally or something. And, you know, the markets ebb and flow. That's what they do. They ebb and flow. And so when you can see some of this just naturally, then, that begins to make sense. So we went from his one press, and we learned that his press was actually part of a pressure cooker. And so they are one and the same. One and the same. And so we know how to map it like this. That'd be like fine tuning, right? That'd be like getting a little more precision with it. And we know how to map it like this. Now, that might not be always an easy trade and always an easy stop and all of that, but this is a start. And if you want to use cash stops, use cash stops. I use plenty of cash stops. But it's you taking the risk. It's you seeing it. There's never going to be an absolute formula, no matter how hard we try, for if this is going to work out for us or not. It's just not going to happen. Because it's moving and changing, but all of a sudden it's organized in itself in a way that we can see that is repeatable. And that's a lot of what we're doing here. And I really want to start to get that across, that we can take something and structure it one way or the other, and we can actually see and read the buyers and sellers. This is a particularly confusing market this morning. You see, I'm just drawing off the V and then following it when it's starting to organize itself. And this is just from the work we did the other day. Remember minor mountain? There's a retest here. Remember minor mountain, major mountain, swings? So we can structure lower lows, lower lows, lower highs, trying. I ain't gonna do it. Now minus all this crap, maybe I got me a trade in here. See, now I can decide. Do I want to play for a turn or this? And this way I'm not drawing a line, and letting the line be my master, which we don't want to happen. All right. So before we get on to our lessons, let's just look at a few things we got going on in the markets. So we have some underlying principles that are going to help us out with things. With our trading. Does anybody repeat some of those principles? It's just a few. And we're putting up some of the blog posts that have to do with that. So here's a slide we did, okay? Here's a slide we did when we were talking about pressure cookers so we can understand something. But we have some underlying principles that are going to run through whatever methods or anything we do. And I want to just keep making that clear. Anybody know what a few of these principles are? And principles meaning it's the common threads that run through everything, no matter what it is you're doing. It's like the principle of flight. As long as you adhere to the principle, there's lots of ways to fly. You can do it with an airplane. You can do it with a helicopter. You can do it with a catapult. There's lots of ways to go about it. Relative, major, minor, good. Zoom, retest. Yeah, I think that's maybe lower down the line. Relative, contract, expand. Yes, good. So let's just list a few things here. So there's a few things under the heading principles. And let's just check them out. Won't let me do a long dash here, huh? I could do 2. Contraction. Expansion. Yeah, it doesn't even look good. I'm going to do it my way. Contraction, expansion. and relative. And we're talking major, minor, and what else, Adam? We can add bar level too, right? But we'll keep the heading down a little bit. And zoom retest, I agree. Continue or reverse? Yes, contraction. See, continue or reverse is like a subheading fill for contraction expansion. But what's another, say, major one here? What's another way to say continue or reverse? And when I say principle, it means it will apply to everything. Yes, the three types of trades are going to fit in here, okay? And you'll always have these three types. Another way to say continue or reverse would be yes, good. Well, what got zoomed is a good question to ask, but Pete's got it, right? Just think in this way. Continued behavior or change in behavior. That one thing alone, Adam, right? That one thing alone you can apply to anything, to gaps, to pressure cookers, to a line, anything. And that will tell you, is the market doing what it's doing anymore? And when that changes. And that one thing alone can just be the most simplest, easiest way to trade. Continued or change in behavior. I'm just going to add one more. And when I say principle, basically everything goes through this kind of a thing. And I'm just going to do one more that has to do with this slide. What are we doing in this slide? There's one more principle I want to add here. So I'm going to keep banging on this. Although you've heard me say it a lot of times, I'm going to keep banging on this. It's a gap, but what are we doing with the gap, Phil? Just follow it. It retests, thank you. But it's moving in what? This is kind of the punchline for what I'm about to show you in the CAD. It starts out as a coil, has a step 1. It does a expansion, a step 2, right? It turns into a gap. It comes back, has a step 3, turns into a mountain. And it goes through a process. And so whether we're looking at pressure cookers, mountains, valleys, so remember at this point it's a projection. And it does not have to. Remember, it can just keep going straight up. Right? It can get here, stall, and not come back at me. It could go straight up. But it's moving in process to make a mountain. And so a pressure cooker moves in process to become a pressure cooker. A valley moves in process. It has to go in pieces. It doesn't have a choice. It just can't skip. And so there's a process involved in all structures. No matter, you can pick up the oldest technical analysis book, the old Schabacker ones or the Dow ones, where they're doing head and shoulders and 3 drive. And you don't know till it's done because it's got a process. A wash and rinse has a process. A pivot has a process. A swing has a process. It goes 1, 2, 3 before it completes itself and makes a cycle. See right here, if this doesn't go underneath and back, it can't be a swing. So a gap is the beginning part of a process of a swing. A mountain is like the next part of the process of a swing. And then blasting that mountain is the next process. And then returning to the retest is the next part of that process that completes a cycle. And so some things have a little more steps in it. So process. And there's other principles, okay? There's other principles. But these are kind of the basics. It's not a lot to remember. You know, relative, things are relative. Contraction, expansion, and I'll fix the spelling there. Contraction, expansion. Everything contracts and expands. Might look a little different, but everything does it, slope to horizontal. There's going to be 3 types of trades, and everything moves in continued behavior or change in a process. All right, so you'll hear me repeat these things. And I'm going to put up the blog post with that also, so we're getting the blogs ready. It's kind of hard to do things, but the more you understand, watch, the more we understand that right here we have a gap. Whoosh. And that's objective and definable. Wide range bar bigger than the last 3 bars with a space. This is a process. Right now it's only a gap, but a gap can turn into a mountain, right, Phil? Or a valley. A gap can turn into a mountain. And so it's going to have a process where maybe it contracts down here or stalls or does something, and then either continues or reverses. But if it continues, it's just a whole different structure. If it reverses, it's now a valley. And so we have steps. Literally, you know, we got the coil, contraction. We can name that. We know what it looks like, and we're going to mark the upper third, basically. We have the gap. And so notice what we're doing when we say expansion. We're expressing expansion via the term gap that we can define. We're expressing contraction via the term, you know, coil. And then we have another contraction, that's a step 3. And then we have a return with one very similar, a gap. It has to reverse. And when it's all done, we got something called a valley. Okay, now the more we understand about process, the more we can follow price. Not only that, the more we can make trade decisions. Now everybody can see that that's a gap. It fits. Yes. Everybody can see that that's the contraction, that's the expansion. And now everybody should be able to see that this is basically another one. So as you watch this in process, you say, okay, this is a projected valley. We don't know what it's going to do. Now this, we do know, can expand this way and continue, or can expand this way. We do understand that. Why? Because when we're here, we understand that this is part of the process. It doesn't have to be a valley. It can do that. It doesn't have to. See? I could just move it around. Same thing here. I can go like this. And, you know, I could say, continue, reverse, just like that. Okay, so the more we understand about process, now look, we can see this market really simply. really simply, look, there's sellers there. Boom, 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 boom. Boom, 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 boom. Right? This is fact. There's sellers there. We gap down, right? This is a smaller gap, and we're holding it. Everybody see, we gap down. We have the ability to read relative now from our principles. This is a smaller gap than this one. And price does what? It does a process. Boom, comes down here. It doesn't coil, but immediately comes back up and makes a minor valley. So now we're using these principles. We're taking something simple, and I'm showing you all the stuff we've learned. So that is a minor valley, right? Boom, boom, return. And we can see them. Boom, boom, boom. This is a major projected valley. All right. So with this much information and process in mind, let's watch what we can do. And everybody can draw this. It's just a multi-pivot line. Seller, 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 seller. You could have actually drawn this here because it's a gap. And see, that would have projected. And it went through its process, and it made a valley. So now we watch, and we see, okay. Yeah, I'm not predicting anything. Well, I don't know. Is it going to expand down? Is it going to expand up? But we're just marking very simply the sellers, and they're showing us. I don't have to predict. I kind of think it's going down. Kind of get that feeling. I mean, it's been a little depressive. And this is where we just, listen. We don't have to be on the chart every bar. This is a lot of bars to be watching and sweating it out. I'll see some things that are interesting, right? I'll see, look at it, they're curling it here, But okay, I'll see. Okay, they're holding that, right? Okay, and now I see a little bit of pressure. It's not bad, right? It's not really factoring in. Maybe I'm doing this because I'm bored, okay? But it's working pretty good, huh? Maybe I'll learn something about these. Oh, there it goes. So much for that. Oh, wait a minute. What's it doing? Now it's just sloppy, so who cares? Big mess. Okay, testing them again. Who cares? All right. Right here, right now, understanding process and understanding what just happened, can we create our own little unique trade plan? It did start with that press, right, Grace? You could tell they were picking at it in here, huh? They kind of fooled you in all here, but you could tell they were picking at it. You good. You got a little feeling, right? You get a little feeling, right? But can we come by the projected mountain after this? I mean, by it here, Raj? And see, right now we can tell a story. Yes, right? And does that make sense that, okay, we have this projected valley and this contraction, it seems to be quite a bit of room in here, 20, 30 tick stoppers. There seems to be a lot of room in here. And so, look, we can make a trade plan on this. And no lines, Ma. You can put lines on there if you want. But why is it we can make a trade plan here that's halfway intelligent? Because we understand the process of a valley. You don't know. I mean, you could do something and it just rolls. You don't know. You don't know. Or Phil says, yes, sell the major valley. You could sell the major valley too. You could buy and sell it, huh, Phil? To me, when I see this, I saw this. I was busy. I was working yesterday. And when I saw this, it was like, oh, that's easy. Throw in some orders, go back to work. And so this becomes, without getting your nose flat to the screen, thank you, Steve T, right? Yeah, I don't know if it's making donuts, Phil. I mean, I never really liked that term or looked at it that way. It's kind of like, it's more like, you're taking I guess it's the same, you're taking sort of the intensity out of it. But, see, with making donuts, you do it the same way every time, so I never really liked that term. But, if you just see something and relax with it, watch the four-letter word like work. But you get what I mean, Phil? It just flows, right? And if that term works for you, that's good. You can use that term. But it's just, it makes sense to risk my money here because they showed me something. It just makes sense to go ahead and risk my money here because they showed me something and then go with it. And it's because I understand that this is projecting this. Now, you don't have to take these trades, but you know what? You can actually specialize in these trades, Phil, if this kind of thing is easy to see for you. You might not get them this pretty all the time, but you can actually just say, I'm going to specialize in nothing but this. And then when we do our gap work, you'll start to see. It's light green because this is the try. This is a gap, and then somewhere up here be a bigger one. But it's really easy to see, and the reason is because maybe we take things apart in process, and then we put our work into it, and then we follow it, like, or flow with it, like Phil says. And now as it gets up here, this is an obvious place to take a little bit of money or tighten up stops, and even consider a turn. It's probably not going to happen in the next 5 minutes. The price will have to, go through its machinations here, and it's going to have to deal with these people who threw him off the cliff, and we're going to watch him. Watch him get excited. See this? Look at him get excited. I got to get in. I got to get in. And they're just running right into the cliff. That's it. And by the way, if you really want to tighten stops up, you can use the swing principle. We didn't put the swings up there. And we can just go bar level. And so whenever I'm tightening stops up, whenever I'm tightening stops up and there are no swings, I'm going to hang a few bars. I'm going to hang a few bars back, or maybe the biggest bar back. And, run stops, maybe 2 or 3 bars back, something like that, as I want to push. Because who knows, it might blast through here. It might. All right, so this is trading. It's not adhering to a dogma. It's not adhering to a squiggly line. Red means buy, green means sell. That's how I'd make my system. This is trading. You see something, and you didn't know it would happen, but you see this, and you go, oh, okay. Just like that, right? Don't buy here, Phil, okay? And Nate, right, something interesting. And, it doesn't always work out for you. But I just want everybody to really get that just by understanding the process of something, you can make decisions along that process in different places. And who knows what this does? See, we don't know. It could give us a telegram that it's turning from here. It could pressure on through and retest. We don't know. But we can then follow that if this is a process, what has to happen to finish the process of a swing cycle? See, our work isn't over yet. There's still one last process we can add to this. There's 4 more pieces if we want to. This is why we're looking at and learning these things like that. If this, Raj says a pivot, right? But let's say we wanted to make a swing cycle, Raj. It might go something like this. And so now we have a valley, mountain. Yeah, double out, and it's a good place to start looking. Now we have a valley, mountain, and swing. And that would be these steps all over again. Expansion, come back, make a mountain, and put it on top of a valley. That's all a median line does. It just does it sloped. We take a mountain. It's going to look like this. And we put it on top of a valley. And so what I wanted to do was just very simple. That's how it trades. We did this already, but I'm going to make you guys do it again. Just look at price. Just soften your eyes. Okay, you're coming into it today. Remember we did the whole crazy bar thing? Don't focus on anything specific. Just soften your eyes and see if you can see the line price is on. Just take a look. And if you're watching the recording, do the same thing. Just soften your eyes and see if you can see the line price is on. Price is on a line. You can see it's kind of tilted upward. Nate says, I can only see the one on the tops. Good. That's what you see then, right? You see the line on the tops. Nothing wrong with that. There is a line on the tops, isn't there? There's a line. We drew this the other day, looking at this. The crazy bar. We drew the line. Okay. So, we can do something like that. And, you can begin, you can even do like this, but you can begin to see a rhythm now. And the lower one that gets cut through twice. Yeah, you can do things like this and make it a zone, but you should be able to begin to see a rhythm. You should be able to begin to see a rhythm like this. Everybody kind of structure that now. And then this is like a half a swing. Grace, I kept seeing the gaps down that kept getting stopped. Yeah, right? Gap down, new high. Gap down, new high. That's a continued behavior, isn't it? Yes. Surfer girl. I don't know what you're talking about, Edward. That made sense to me. That sounded very pragmatic. It is kind of like surfing these, right? All right, so this is where you start. There's a rhythm going on here. And so when you get crazy bar, does it maintain that rhythm? Each of those highs is only 10 to 12 pips higher than the last. Yes, Gary, good. That's actually something you can use as sort of a research thing to do change or continued behavior. Measure the size of the new high, like that. So I'm just giving you some ideas. And you're seeing something. See, what you're doing, Gary, is your eyes are tuning. Now, from the noise to you're seeing structures because you can swing. Your eyes are tuning to, oh, let's structure this in some way. And you can structure it just this way if you wanted to. I've got separate lessons for these, actually. And so that's a good C. But I also, add that to just, that's the rhythm that the thing is on. And so now we know if it maintains that rhythm or not. And this is, just the very simple, okay, break the minor. You can now do swings. See, we're structuring the market. And now we can even take our little swings if we want. And do you guys see a last swing broke in here? So we can even take our little swings and start looking the other way. To think about if we want to continue that rhythm or not. It might not last, but I can tell you one thing. As of 10 a.m. this morning, this was holding, and obviously was hitting these sellers in this press. We know how to do that now. And we kind of get price trapped. So we're in the bottom part of this rhythm, and we'll just take it current. And you see it's swinging now. See, this red rhythm is the same as this blue rhythm we were doing. And, this is the break the mountain into the gap kind of a thing. But I just, it really just starts with a very simple, look and see what the market's doing. It's on that line. And guess what? This is a contraction like this. See all this? I'm going principle on you now. This is a contraction the same way this is a contraction that can expand this way or expand this way. And so we know the rhythm, and if that rhythm busts, we know there's a possible expansion out this way. Same like the CAD, but sloped. Yeah, it's a contraction, but it's a big slope contraction that you can make decisions on. And this looks like what we call a pivot down in here. It's got all the characteristics. And it came with a few swings. Whether it goes anywhere, who knows? It's doing what it's doing until it's not doing it. I'm not going to fight that. If it wants to break it, I'll go the other way. I don't care. Who knows? Okay, so I'm really just trying to exercise us a little bit in, that's the line, that's the rhythm. See the rhythm. I got to find my little magic marker again. Where's my little yellow magic marker? Where's my draw tools? I know I got it in here someplace. I'll have to look for that later. I missed my little marker. Oh, there it is. Hang on, I found it. Aha. See, I'm not as dumb as I look. Aha, there it is. That's my favorite tool. Just like that. So that's what we're doing. Don't even comment on that, Grace. I thought you were going to comment on my dumb as I look. All right. It is a cool tool, you know. And see, it's just waving. It's just, it's just cycles. See the line? It's just cycles. See the action, the reaction. All right. So cool. Now how do I get rid of it? Ah, cool. All right. As long as we're on a roll. God, there's so much to do today. There's something live I want to watch. All right? And this has to do with simple also. You come to a market. It looks stupid and crazy. We're now looking at the New Zealand yen, 60-minute. It doesn't matter what time frame you're on. I just have these on the 60. And so now what you want to do with some of this is just begin to structure it. You can see the line it's on, but we want to begin to structure this thing. This is what the main lessons are about here. Structuring markets. We're going to learn a lot of different ways to do that. But it's really just about, structuring markets. And so we understand swings. We understand relative swings. We understand if we get two confirmed lows, what are we going to call that basically? Principle-wise. I want to lead us all up to this. It's press and it's continued behavior, right? We can call it a press structure. And then the principle underlying it, Phil, right, would be the continued behavior. So if we get two confirmed lows, we can say we get two confirmed lows, and we can add one more piece to this, relative to confirmed lows. We're now seeing some sort of organization that's happening. And so then we just come to here and, we start looking. Okay, where are the lows? I got lows, I got lows, I got lows. And, okay, let me see if I can get a handle on this. About the same. About the same. See? And you can start to get a handle on what's going on. See, there's a whole bunch of them, actually. So when I start doing that, life becomes a little bit easier for me. When I start doing that, I can play with my little highlighter now. We're just waving. And take a look. You can see that there's a line we're continuing on. And so now we know we have two confirmed lows, and we can just draw a simple line off the last two, like this, and watch. And very nice, Phil. That was a press structure. Then you see the expand. Boom. It's a big one. And so right here, as I'm watching price, I can keep projecting this, and see, we stalled, but no dice. We can see, we can even look and see the gap. This would be the pressure cooker, wouldn't it, of this swing? Yeah? Okay. Stall. Okay, so now, very simply, I found, I'm happy, right? You see that, Edward? I'm happy I found my little yellow highlighter. It did. That made me happy. But right now, I can simply look at this market and I can yell at you, don't buy here, right? Why? Because price swings. But I can also say, very simply, this is a change in behavior. There it was, Phil, right? Don't buy here. Why? Because swings swing. Don't buy here. Swing swing. All right. But let's just start out with the simple. See, when I look at this market, I'm drawing the model alongside of it just to see the model. Now, this doesn't mean I have an automatic buy. It doesn't mean I have everything does cycle too, Stephen, right? I should have put swings in there. Everything. You can't find me something that doesn't go in process and doesn't cycle. Everything has a beginning, middle, and end, and everything, and that is the cycle. Everything. Everything cycles. Everything goes in a wave. It has highs and lows. Everything. Everything. And so does price. And we can see it in price. And we can actually take, price is just a charting of everybody's emotions and everything. But even if we took, say, the sound of my voice, and you charted it, it would come in waves. If we charted our emotions, you would see the highs and the lows, and we'd all have a particular frequency and a rhythm that we went into. Some of us are a little more even, some of us go up, some of us go down, some of us stay up, some of us stay down. But, there's always a cycle going on relative to that. But just look at the chart, and it's very simple. Something changed. Oh, okay, there's my valley. Is there going to be a mountain that makes the cycle? I don't know. But something changed. And so now, I'm pulling this up because we're live now. Once something changed, I had my choices to either get short a type 2 or to think about getting long a type 3 of that change. Let's just take it live. And what else I can do is I can mark swings. I can see gaps. See, now I'm using the relative principle, and I'm just looking at this leg individually, and this leg individually is showing me these are my swings, and that's my gap. So let's read it. You ready, Adam? You still with me? All right, let's read it. I want you to do your own reading. I know you love to read price. All right, we got all these sellers up here. We're testing the lows, just kind of ginchy, and a wide range bar. Doesn't close on its low. Lower low, lower high. Lower low, hard down. So now you see there's a little bit of swap from buyers. Buyers picking at it, buyers picking at it. Don't project, don't predict. Doesn't have to mean anything other than what it is. Inside bar. So remember, the inside's coming after the hard down. Inside this one bar is a gap. if you went down in time frame. Okay, lower low. Wide range bar, it's bigger than the last three with a tail. We can see them. We can see them just like the yen. These guys are traveling this path. Hard up, we've just swapped that path. Let's go ahead and mark this fall. Outside bar, so here's what I want you to see bar-wise. This falls into our relative. We now went like this, and we're swinging. See, it's about the same size swing as this one. Now I'm just reading bar action. This is funky, wide range bar heading down. So this swing is trying. Double bottom, it's going down. Higher high, higher low. Higher high, higher low. You guys should begin to see it putting up some pressure. Boom. Do you see another swing now? Internally. I'm just looking at swings now. Try. Yes. Oh yes. Good. You got the feel. Okay, good. I'm not coming to conclusions. I'm just reading what is there. We have the ability to do this. Testing the gap, and now we have a little swing like this. Testing the gap, pulling back, and so now we can get curious. There's a definite drive going on in here someplace. Hard down, tail, dripping down, dripping down, dripping down. Current. Okay, so that's where we're at. So obviously these gappers are holding it. So now we can take that and just consider this chart basically. So let me draw the line from where we had it. Something like this. Now we're just making them up. See, I don't care if it's perfect or not. All right? I just want to see that something changed. That's all. I just want to see that something changed. If you want it perfect, then you can go ahead and look at your swings, and you can draw it point to point, and it's going to look something like that. And so now we get curious, right? Is this thing going to hold here? Is it going to take these guys out? Or are we just going to zoom and keep going down? We don't know. Hang out and learn. Okay. I like to try down, so it's interesting. All right, cool. So I'm going to now do my own bit of practice that I asked everybody else to do. We're not going to get to type 2s today, but I'm going to do my own bit of practice that I'm going to post in that homework section of Slack is my homework, but I think we're going to call it practice or conversations with Price or something. So maybe we can rename that. So I got a couple heads up for conversations with Price, Grace. So a few people really like that. So maybe we'll We'll call it that, and then practice at the end or something like that. So I'm going to do my own little bit here with this NASDAQ. Now, what I asked you to do was to find clean, very pretty examples to post them. And I want to demonstrate, I'm going to post the examples. I'm going to do a little extra work so we can maybe use it as a model. But I suggest you guys even do some of the extra work in your own homework as well. So what I'm going to do is find clean, pretty, beautiful examples that, already went down and did their thing. So, in here, do you guys see a very pretty example of a pressure cooker, a type 1? And so Monday I was doing upward, and today we're going to do down. All right, good. But you guys see it, right? Would you agree it's a very pretty, clear-cut, significant one? And around midnight? Yes. Good. Thank you, Adam. Yes. And so this is what I want from your practice. Find the cherry-picked ones for your practice. And actually, for trading, it's kind of best to wait for the cherry-picked ones. Really. But you can do whatever you want and at least orient yourself to a chart because it's not a system. All right, so one of the things I told you made for a really nice one. First, let's put the instructions up. So I'm going to make a chart to go in. So let's put the instructions up. Thank you, Phil. Number 1 is identify a confirmed swing. Number 2 is what? And if you're watching the recording, play along. And even if you're sitting there watching me being lazy, think it out. Okay, yeah, you go back, right? We got to tighten it up because what if we want to teach this to, our children or something? I don't know about you guys, but my children are kind of dumb. So this generation, you got to watch out for them. So we really got to spell things out. My child, he's 30, but he's like Forrest Gump. You don't have children. Good thing I don't have children to have sex. Oh. I know, everybody brags on their children. My child is Forrest Gump. All right. So what we're going to do, step 2 is follow price. And we got to try to, we'll still keep tightening this up. Back above the low. I know this isn't completely objective, but I just like to say it. To where price fell off, price was thrown off. Feeling a little uppity today, so we're going to throw him off the cliff. Feeling my oats today. Forrest Gump was a good guy, Grace. See, that's my son. He's Forrest Gump. He doesn't know jack, but he just keeps tripping into good stuff. So what are you going to do? I leave him alone. He just trips around, does fine. And so 3 is basically, yeah, he'll be just fine as long as I leave him alone, huh? As long as I leave him alone. So 3 is going to be draw a red box for the pressure cooker. And then we can say make observations and consider 3 types of trades and the try. We'll throw the try in there. Okay, so step 1. Let's do it. We're down here. We follow price back up. Now, this is what I mean by a clean example. Okay, right here, you know, price is trying, and they just drive it through the low. Okay, they drive it through the low. There's no, see here, they come through the low, okay, but they just drive it, and so now we follow it back up to its contraction and put a red box. And one thing you can consider doing when you're doing your own posting charts of this kind of a thing is somewhere next to it, see it in your mind, and draw the model and think about what that would look like. Make that a little smaller, because now, you know, we're going to get into a few little things here, like we haven't gotten all the way into detail with this thing, but we're going to get into a few little things like this being, whether it is or isn't, a relative swing. See what I'm saying? Sometimes it is, sometimes it isn't, and that's part of our learning. So notice the relative swing cycle in this guy. This is what makes this such a beautiful example. And you know what? I didn't have to go far to look for this. This was yesterday. This was yesterday in the NASDAQ. And I know, Steve T., you're going to be happy, right? Gina, you're going to be happy. I'm showing the NASDAQ here. See, I get around to it. Here to please. Okay. But everybody see that we might not have thought of that before, that, okay, sometimes it's going to be a minor swing that lands in there and sometimes a major swing. So that's an interesting distinction I will point out, but that I also want you to trip over from your practice. And so we see the model, and we can also, let's label it. So this is going to be a type 1 push trade. To the downside. Okay? Let's put a color on that. It's going to be a type 1 push trade to the downside. Type 1 push trade to the downside. And how do I know it's a type 1 push trade? Because it already worked, right? I'm going to find ones that already went and did their thing. And so the model fits all this gobbledygook. The model fits all this gobbledygook. And so let's follow, we're thrown off the cliff, and let's also mention that this is, let's put a little bit of a technical term in here, right? This is going to be the POI. And so now I can mark, the instructions say POI, this is the POI. Now notice this is taking some time to do all of this. This is okay. You know, think about it this way. If you're going to post a chart in the homework section, you want to try and do your best as if you were teaching it. So when you do post a chart in the practice session, if you treated it like you had to teach it, you'll have to think about all the little things you want to include in case somebody is a little unsure. They can come in and match the model. Say, oh, that's where the POI is in the model. And that's a type 1 trade. And we don't have to get crazy and show what type 1 trades are and all of that. But we can write, it's confirmed swing, step 1, and you can even write the process of it. You don't want to get too much, but you want it to be very descriptive so that if I posted this chart, or you posted a chart, then somebody could actually work off of your chart and look for this. And you might have better ways to show this than I do. I'm just doing it my way to get across, and then I'm here, and then I can just keep asking people, does this make sense? Does this make sense? But if you do this, and you don't, sometimes we're just not up for doing that work. I understand. Do what you can. But if you treat it as you're teaching it to somebody, you're going to learn more, because then you put your butt on the line a little bit. That's one of the reasons I learned so much from you guys. I draw the little model, and even with my trades, I'll draw the little model. Yeah, and so Grace, and you have to explain it, right? And so try to do your explaining on the chart since you don't have a voice and it's going into the practice session. And explain it the best you can in the most objective way you can, and find a clean example. And then, boom, you have a snapshot ready to go. And, all I see here is the model now. I just see the model. I just see the waves. I just see the model. Now, I'll put a little extra up here. And, you notice I'm starting to capitalize a little bit more. I'm not going to capitalize this just to be rebellious. But some of it, you see, you can do that if you want to do that and just make it all nice and pretty. So I'm going to leave one of these out at least. And then I gotta come over here, and I'm going to add a little bit more just for everybody's clarification, and say and I'll even capitalize pressure cooker. The pressure cooker, let's see, how could I say this, is created from, so now I'm trying to describe it, all right? A little more understanding. So it's created from resisted movement. That's what it's created from. It's created from resisted movement. So what's happening is there's buyers, there's sellers pushing this down, and there's buyers holding it. And you can see that. You can see that right here. You can see that trying. And so there is a resisted movement. And that's what causes contraction. Oh, thank you, Edward. And yeah, if you're going to post it, don't be like me, who doesn't care what my spelling looks like. I'm doing my own thing. See if you guys can get Ensign to put a spell check in here. And so from here, we can also say it's created from resisted movement. Hard not to bring that box to the left to see what created the pressure. And that's one of the things I want you to do, Nate. That's part of the learning. But everybody needs to add those things as they're ready. And so that's definitely part of the curiosity, because one thing I can tell you is that one structure creates the next, right? So watch what happens if I get a little curious and see what created this pressure cooker. I can begin to see mountain, valley. And so this structure here this try. See the line? And Nate, I know you love that little line, right? It can help you see. It's a try. Okay? Yeah, you love that little line. It's a beautiful line. I just don't want you getting crazy with it. You know, it's a beautiful line to do. Actions, A1, A2, actions, reactions. In these, a lot of times, I like the A1. See that? Isn't that pretty? That's pretty. But now we're just showing off. And so a pressure cooker is created from resistive movement. But please, I want everybody to explore. You know, once you get the stuff down, I want you to be curious and explore. One structure does create the next structure. And so this is basically, I'm going to describe it best I can here. The sellers meeting buyers on the way to a new low. Just like that. So that's a little description I'm going to put. Now I'm going to put, say, an objective description in here. I'm going to try and state the nature of a pressure cooker. Okay? I want to get the nature of it, the essence of it. So anybody have any idea what the nature of a pressure cooker is? We're calling it a pressure cooker because it's a certain place in the swing. But what is it? What is it? So I'm going to finish this one little piece out, and then I'll have my homework done. So the nature of a pressure cooker structure is contraction before expansion. What's another way to say that? What's contraction and then expansion? What are those two things equal? And the more time we spend on this, the better, because more things start to come. Buyers try, but sellers win. But what is the technical term, Phil, that contraction, expansion, how do we have a technical term for that? Swings. So think about contraction, expansion. We have a technical term for that. It's not a swing yet. Gap. Thank you, Phil. Good. So we can say, so now I'm going to try to describe what it is. It's a gap. And a gap, I'm just going to keep stepping here. A gap is a projected, in this case, valley. It's a projected valley. Now I have to add one more piece to this to finish it out. So it's a gap that's a projected valley in the bottom half of the impulse leg. Just like that. Right? The pressure cooker is created from resisted movement. The sellers meeting buyers on the way to a new low. It's a gap. A gap is a projected valley in the bottom half. See, we know what an impulse leg is, right? So it's close enough. I'm going to give it to it. In the bottom half of an impulse leg. Valley. Valley. I spelled valley wrong? No, I spelled it right. Okay, good. So it's a little busy. So it's a little busy, but I didn't time this out very well. We'll leave it like that. So now I'll take a picture. NQ PC, and I'm going to come over here to homework, which you guys are going to rename as soon as I find it. Show all channels, charts, sessions, general, language, now where to go? I can't find it now. Don't laugh at me, Mom. Oh, a session example? You changed it on me? Oh, that's why. You guys, now you're screwing with me. All right. Oh, you changed the name on me. There it is. Okay, so now I'm going to join session examples. Hey. Right one? We got it? All right, cool. And I'm going to find my chart. You guys have to put up with me doing this. I'm going to find my chart, and I'll label it pressure cooker reference chart. Pressure cooker type 1 to downside reference chart. Go find out where I put it. All right, it's in there. We're there. Hey, Bojan. Join session examples along with 8 others. Okay, cool. Thank you. So you found it. All right, so we're in. So I posted that chart. And Shane won. Slag 0. Shane's winning. I won that one, didn't I? All right. So that's a good example. And Friday we'll do some type 2s. Okay? We'll do some type 2s. Let's just look real quick. It's not the pretty one. I want to look for pretty ones. Where might you put a pressure cooker up here? Right here, right? New swing, pressure cooker. See, I'm looking at the gap. New low, pressure cooker. Type 1 doesn't work. Type 2, notice it's coming into the second gap, guys. Type 2 seems to play. And then back. Type 3, no dice. Everybody get that there's an obvious no type 3 in here? And that's current. So we're banging off of that today. One thing with these things, though, be careful, how far and how many crisscrosses it does. But that would be a type 2. Okay? That would be a type 2 of that guy. And then if you didn't get in the type 2, you would do something like this. See how that would make sense? Everybody see that? That might make sense for a trade this morning. If you drew this, and then you drew this, and that would make, you might get stopped out, but that would make for not a bad trade idea. Anyways, you might get profits stopped out on the way, but that would make not a bad trade idea. And one thing you'll notice about these pressure cookers, they don't tell you anything about time. See? Look, they can hit on this thing forever. And so we're going to have to figure out how to manage our stops when it comes to this thing. All right, so I'm going to end the session there. And I want to keep an eye on the yen. I want to keep an eye on this New Zealand yen. We never did come back to this guy, which we'll do. And we'll just wrap it up there and see what goes on. I could talk charts for the next 3 hours, guys. Today, my vision is interesting. So thank you, Raj. Thank you, Edward. I appreciate you guys playing along. I really do. And thanks for that chart, that Amazon chart. I love it when you guys are seeing your own thing and doing your own thing and taking the risk and fumbling and crashing. Hey, I got to fumble and crash too. And thank you, Adam, for playing around. I know this isn't an easy thing to do, but we're trading here, right? We're not just picking pretty things and saying, everybody, hurrah. We're trading and finding our way. But we're able to see the markets, right? A little bit of structure, a little bit of line, a little bit of principle. We can see. And now we're ready to practice. Absolutely. I'm glad you guys get it. Thank you, Adam. Take care.